Ever found yourself scratching your head at the mention of home loans? It's a common puzzle for many, but here's a secret. It's not as hard as it seems. The confusion often arises from not understanding the basics. So, let's unravel this mystery together. Imagine working hard, earning every penny, and then investing it in the asset you cherish, your home. It's a long-term commitment, and the choices you make can either save or cost you a fortune. The key is to understand what's best for you, and that can only happen when you understand home loans. The aim here is to simplify this concept, to make it fun and easy to grasp. Once you master the basics, it becomes a lifelong skill, and you can even pass it on to your kids. More importantly, understanding this can help you manage the hundreds and thousands of dollars tied up in your home loan, potentially securing a comfortable retirement or even building multiple assets. I have created this series on home loan for better financial future, as it's your hard-earned money. Also, other financial tips. Tricks to make life easier. Help educate kids through these videos for financial well-being. So, what exactly is a home loan? It's essentially an agreement where someone lends you money and you promise to pay it back. Simple, right? But how do you assure the lender that you can pay them back? This is where your income and expenses come into play. The lender needs to ascertain you have enough cash left after your expenses to make the repayments. However, complications arise when there's a discrepancy between what you declare as your income and expenses and what the bank estimates. For example, if you have a family of 4 and declare your expenses to be $20,000, the bank may not accept it as realistic. Similarly, if you run a business and earn a good income but show a lower figure to reduce your tax liability, the bank may not accept your declared income. They rely on the figures you've submitted to the tax office. So, what happens when you don't declare your real income, even though you have the capacity to make repayments? This is where the residual income comes into play. The bank uses this residual income to assess your ability to repay the loan. Consider this: you have a $1 million home loan at a 6% interest rate. That's $60,000 in interest every year. Add the principal repayments to that and you've got your total repayment amount. It's as straightforward as that. In conclusion, understanding home loans isn't rocket science. It's about knowing the basics, understanding your financial situation, and making informed decisions. So go forth and conquer the world of home loans. Remember to keep it fun, understand it yourself, and don't rely solely on others. Keep watching more videos in this series for more insights, and don't forget to like and subscribe.